7:30 a.m. New York, London lunch. It's Wednesday, the 21st of January, 2015. This is your Daily Forex Trading Strategy session, brought to you by Traders Way. My name is Wayne McDonald. I'm the Chief FX Market Strategist. Currently, we got a weak British pound, fairly weak euro, quite strong Swiss franc, very strong Japanese yen, weak dollar, moderate Aussie, moderate CAD, moderate Kiwi. Let's do some trade planning, eh? All right, so we got some requests out here. Pound dollar, euro dollar, USD yen, Kiwi yen. So what's going on? Well, the Japanese yen is strong right now. Why, you say? Well, remember on Monday, we went through the calendar. It's just tons and tons and tons of central banking event risks. One of them was the Bank of Japan discussing their policy. Guess what? They're not changing anything, which is fine. They're doing tons of quantitative easing and other stimulus measures. Great, good, 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 good. But they've lowered their inflation forecast. Oh! Because that's what they're trying to do, is create inflation. Wah, wah, wah. So that actually strengthens the Japanese. So the Japanese yen's a little bit strong today. The UK, guess what? They've left their interest rates and their central banking policy the same. But they've lowered their forecast. Actually, two of the members that wanted to raise interest rates, now they don't want to raise interest rates. So what's dragging inflation down, guys? Inflation's falling in the United States. Inflation's falling in the Eurozone. Inflation's falling in Japan. Inflation's falling in the UK. What's going on, yo? Oil. Thank you. I don't know what you call it. Not backwardation. There's another funny name. But anyways, there's this distortion in the last CPI data. It was very interesting. Core was significantly higher than headline inflation, which is usually the other way around. Very interesting. So this is for all the central banks around the world, especially the ones that were late to the party and are now trying to create inflation. This really impedes everything that they're doing. So anyways, what's the net effect? Well, low inflation in Japan is actually going to create a strong Japanese yen. Low inflation in the UK is going to create a weak British pound. I know they're opposite. It doesn't make sense, but I don't know. It does. It does make sense for whatever topsy-turvy world reasons. It does make sense. Okay, so that's what we're left with today. Obviously, tomorrow's the big event risk of the week. And if you recall on Monday, I said start the week with British pound and CAD, and then end the week with CAD. CAD's been a big mover as well, as you can see here. I was a little cheeky monkey yesterday and scalped a short off of here and got out around the pivot. Oh. All right, so let's move on. Actually, you know what? No, was it there? Yeah, it must have been there. All right, let's do an exercise here because I don't want to go through all my charts and tell you what I would do. It's not my job, really. I mean, I can do the technical analysis. Where your success is ultimately going to be made as an independent, successful Forex trader is your ability to make a decision. Because there's going to be opportunities long and short, bull or bear, dove or hawk, throughout every chart, throughout every pair, throughout all the market conditions. Your ability or your alpha to outsmart the market is going to be your decision-making process based on whatever information. Okay, fine. So you tell me. Let's go through an exercise here. This is the S&P 500. That's not really what I meant to bring up, but let's do this. You tell me for the rest of the day, for the rest of this session, should I be bullish on the US dollar or bearish on the US dollar? And then I'm going to go through and I'm going to set up trade plans based on that bias that you gave me. Okay? Just like I was sitting and planning my trades, setting things up, you have to start with a fundamental bias. So am I a bull or am I a bear? You tell me and I'll go through the charts. Okay, 2 bulls, 3 bulls. No, I'm just talking about US dollar, guys. Don't mix it up. It's a simple question. Am I bullish on the US dollar or am I bearish on the US dollar? Come on. Thank you, Ian. Thank you, Sharon. Thank you, Wyatt. Thank you. Peng, Daniel, Izzy, Fendi. Are you going to vote Fendi? Come on, guys. Slightly leaning towards bull. Thank you, Fendi. Thank you, Jim. He was very bullish. Okay. So I'm a bull then. Thank you very much for participating. Hey, wait. Let's get the other Jim in there. Come on, Jim. Finish it up. Thank you, Jim. Leave no trader behind. All right, so I'm a bull on the US dollar today. Thank you very much. Let's set up our trades. Boom, 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 boom. Okay, yeah, so we're on British dollar, pound dollar. Fine. Let's. Okay, first thing I want to do, since I'm a bear on this pair, because I'm bullish on the US dollar, I want to identify levels of resistance. And ooh, you know, there's something kind of in here. Oh, we've already missed that one. Doop. All right. So right now, those are my levels of resistance. And I'm saying we might have missed one already, because the way that you do it is as soon as you make a lower low, which we did here, right, when we broke through the gray zone, this gray zone should then in the future become a place to sell. You could see a couple hours later we were back up there. That's a beautiful sell. Okay, first target here should probably be this low through the weekly S1, or let's just call it 50-50. And then it should come back, retest it sometime in the future, and that would be a new sell zone, just like we did here. Okay, so let me back out a little more, try to squeeze this on the chart. So the next trade plan would be if it breaks, it's probably going to find some sort of support here around 150.00. Probably not quite, right? So we got the psych level and we got the weekly pivot. Probably come back up to here and we will use this area as price action short. Okay. I'm going to mark this last area here. Area of concern. Okay, that support. So another thing that might happen, it could come down, hit the support, and then break, come back, go. All right. That's what I'm thinking. Smell like a plan? Okay. Euro dollar. If I'm a bull, got to set this up. Ideally, I got to find my levels of support of resistance. As a bear on this pair, I want to sell at resistance. I'm not going to count this as resistance, so I need to mark this. wondering what all the vertical lines are, those are the market opens. See, I have the choice here of using this area as a resistance play. I don't know. I could. Not so sure about it. Okay. Where we are now, I would like for it to roll over because it's just an easier trade as a technician, right? Okay, so we test this top, fine. Makes a low, back into support, fine, makes sense. Somebody fibbed it because they were more bearish than bullish, that's fine. Makes another lower low compared to this low, fine, it's good. So now what we should see is that, okay? If we head farther up, it complicates things, and I don't like things being complicated. Now, maybe things do get complicated because of tomorrow's event risk with the ECB. Okay. But let's set it up technically. Is there anything else in here I can use? Is there a psych level? Yeah, 16. So let's mark 16. I'm going to use a horizontal line to mark 16. Okay. Vertical line. Oops, wrong one. Hang on. Horizontal line. Okay, 116. I like to get this precise. 0, 0, 0, 0, 0, 0. Boom. Yeah, so that's why that's there. I hope we don't even go that far up, okay? But I would be looking to do this, okay? So that's the hourly. Let's see, I didn't want to do it that way. Well, I guess we'll do it that way. Fine, let's drop into a 15, find R, and oh, I don't have an oscillator. Let's change the template. Hopefully it doesn't kill all my analysis, but you know what, I can just add it. Insert indicators, oscillators. That doesn't look right, is it? No, we'll leave it. That's not right. Hang on. Just want to double check my standard settings. It's 853, right? Let me pull it up on a different. Let's double check my Stokes. You go like this. You go to indicator list, stochastic oscillator, edit, and hang on. Okay, the first one I set at 8. This one here, I set at 5. Lower one, I like at 3. Colors. Light sea green, nah. I like forest green. Here, red, nah, too easy. Fire brick. And let's fatten these suckers up a little bit. What do you think? Let's do, that's a little too fat, right? Little MT4 lesson here. Boom, shalaka-laka. All right, so now I'm looking, so we're in what I call an AO, an area of opportunity if I'm a bear. So I have permission to consider shorting. Roger that, permission to short. Copy that, overlord. All right, but I'm not overbought or oversold. So it's less what it's saying is the market's not quite ready. And I like the 15-minute chart a lot. Okay. So it just says not quite ready. Maybe closer to the U.S. market open. 5-minute is moderate as well. So I guess we got to let this rise a little bit closer to the psych level, get a little more overbought, and then drop it. Everybody see that? See, what I'm looking for is, okay, I'm a bear, fine. I want to sell it high. Good, it's been going up. I want to use some price action, which is up in here, this gray zone. I'd like a psych level, which is the 116, which is just slightly above that. But I also want the market to be slightly overbought. If I'm a bear, I want it to be way overbought at resistance at a psych level, and then I want to bring this down. Well, it's not overbought, it's not oversold. It's floating around, right? So I'm not ready yet. I might be a bear, I might be near resistance, the market's not ready. Seems pretty quiet. Okay? A little higher would be a little lesser. And I'm only talking about 10 or so pips. Okay, so I got to keep my eyes on the prize. Everything's there, it's just the timing's wrong. And you know, as a trader, timing's everything, isn't it? Kenny wants to know if that's divergence. Let's take a look at it. Oh, are you doing it this way? Is that how you're reading it? Yeah, I think you're reading too much into it. I mean, you're not wrong, but you know, fine, you know, but yeah, I wouldn't make a big stink about that. What it's showing me really is just nobody's trading right now. Do you think they're cautious about tomorrow's event risk? See, this is really key to be. This is really key to be a successful trader. First of all, most amateurs have no idea about what the rest of the market's thinking. Right? They're just not on the clue train. How would they be? Right? They're not sure what they're not worried about what everyone else is worried about. Right? So it's important to be able to learn how to read the market, and then most importantly, adjust expectations according to market conditions. So I'm reading this saying, wow, the market's really cautious. There's not a lot going on. They're not being aggressive. I'm not going to be aggressive. If I'm going to trade, I want extreme conditions, right? I want to be extremely overbought at resistance, and then I'm going to drop it like it's hot. Am I going to get caught, you know, monkey in the middle? The market's not overbought. It's not oversold. No. It would fall if it's not overbought, right? Why would someone sell it if we're not quite at resistance? So I just got to be a little more conservative, that's all. And because I read the market being conservative. Now, if the market's aggressive, it's moving fast and furiously, then, you know, I'll adjust my expectations accordingly. And that's where you scalp every retracement on a 5-minute chart, right? taking 20 to 50 pips at a time. Boom, boom, next, boom, boom, next, boom, boom, next. When the market's not moving, you know, I'm not pushing the market. I'm just waiting. Maybe take the more conservative entries. You know, wait for the better levels, right? So right now, again, I'm looking at some price action. Good. But I also want to catch the psych level. So let it go a little higher, then we'll see where we are then. Okay. The divergence there is showing me that the market's cautious. Okay. All right. What's going on here? Aussie dog. Okay. I'm a bull on the U.S. dollar, so that means I need to be a bear on this pair. Am I at support or resistance? Wow, we don't have much going on here, right? This goes back, I think, last week. This gray zone. You know, it's hard to make anything out of this, right? Where's my resistance? Well, we got the pivot cluster way up here. A weekly and a monthly overlapped, but we're not even really touching that. I mean, the resistance is really here. And the support is kind of really down here, right? I mean, it's off this lower one. You know, at best, this is mediocre. Okay, so U.S. dollar seems strong, but Aussie's still getting, you know, bid up a little bit off of the positive UK, right? Your positive UK, positive Chinese GDP is what I'm trying to say in English. Okay, so I see that in the market too. Also, does that say be aggressive? Does that say be conservative? No. So what it's really doing is we're range bound, and that's when you really do use your oscillators. Okay, you have to hit the gray zones first, and if you're at support and this is starting to rise, you can take a shot. If you're at resistance and it's like this, you can take the shot. Okay, you see how we went down to support, and oscillators were not with us. It just shows mediocrity. We're stuck in the middle of the range. 15-minute chart. See, the 15-minute chart says down on the Aussie dollar. So, and we are at resistance. It's just not the, it's, how do you say in English? It's the aggressive. It's the moderate resistance. Like the real resistance is way up here. I mean, this other one is resistance, so you're going to have to be aggressive to want to sell it, and your target would be down here. I think you could probably just find something better to do. Okay, it's valid. I'd probably skip it. Next, dollar yen. All right, so we want this to go up, but we had the disappointing inflation outlook from the Bank of Japan today, which brings the Japanese yen strength. Fine. Let's go to an hourly chart. I'm going to mark up my support zone because I'm a bull on this. Therefore, I want to buy at support. Okay, there's one there. How am I going to play this one? There's some wicks if you can see what I'm doing here. So how about that? There's a moderate one in here. Only it's a psych level. I guess it is a psych level. Let me that one just for fun. 17 is about here, right? And you can see the little hiccups. All right, fine. All right, so there's my areas of opportunity. Drop into a 15. Do I have permission to long? Roger that. Permission to go long. This is on the oscillator, right? We're at support and we're oversold on the 15-minute chart. Does it mean buy it? No, it means you have permission to consider buying it. Okay? First and foremost, you're at support. And it's oversold. Fine. So now let's drop into a 5-minute chart. Okay? So what I'm going to look for here is playing a double bottom at support. Okay? And I'd like to see, you know, I don't know, some sort of price action. Okay? And I can long it. I can fall back, right? My fallback position is 17 even Steven. So I would want to stop loss less than 50 pips, probably only a 25 pip stop. Treat it like a scalp. In fact, you know, it's already coming down. It looks like it's behaving like it wants to come down to 17. So I got to be cautious. I'm ready to buy. Doesn't mean I have to buy. And the Alamo here is way down here, really 16 and a half. In fact, I'm going to, if I can, no, I don't think I will be. I was going to adjust that to 16 and a half, but don't worry about it. All right. So you can sit here, finger on the trigger, ready to go, hot to go, HOTTOJO, but you don't have to do anything. You know, so again, you set it up like a double bottom. The aggressive entry on a double bottom is to buy it at the double bottom. Okay. What I prefer is a double bottom 1, 2, 3 pattern. Okay, and you buy it here, not there. Pippage wise, not a significant difference. Risk wise, much different. Because you're not guessing and you're not betting. Because if you buy down here, you're very aggressive and you're basically saying, look, I'll bet you that double bottom holds. Well, I don't like that, right? So hopefully, you know, we come down, we test, and it makes a significant, you know, little high. I mean, I'm not talking about much. We're looking at a 5-minute chart, right? A high on a 5-minute chart is nothing, right? So once you get that, then you can say, aha, confirmed double bottom, right? So then what do? Okay, you take the previous high, oops. You take the previous high to the new high, and then you fib that, okay? So let's say it makes a high up to here. I would fib it, okay? And either it's going to kick off this like a 3A2 all the way down to potentially a 618, somewhere in there to go long after the double bottom has been respected, right? And the new high has been achieved. So it'd be like the double bottom. Then it turns green, gets higher than the previous little high, makes a fib retracement, long and gone. Okay? That's how I'd end if I were me. Boop. Next, we got to do some kitty cat. I got a request, I think, for Kiwi, so I'll just keep going. Sharon says my training is incredibly clear. Awesome. Thank you, Sharon. Is everybody enjoying this? Is this helpful? Showing you actually how to go through all your charts, plan it one at a time, set it up. Good. Yes. Awesome. Kenny, certainly. Awesome. Definitely. Greg, very, very awesome. Well, I'm glad. Wyatt's learning a lot about technical analysis. Right on. That's why I'm here. Good. Okay. USD CAD. Okay. If I'm bullish in the US dollar, then I'm buying this pair. Okay. Start by identifying levels of support. I might not be a smart man, but I know what support is. Okay. This one's a little tricky because we're at support now as far as a pivot, right? And the 21 EMA, this was supposed to go higher. And it's not. This is called a step down, which means we come into the 55 EMA, which just happens to be at our support, which would be a buying opportunity. The only problem is it also suggests a double top. So either the kitty cat rebounds today or the dollar weakens, the US dollar weakens. So right off the bat, I got my shields up on this one. Does that mean I don't buy? Oh, I'm going to buy this. I have to adjust my expectations according to market conditions. Because the market doesn't care about what I want. All right, so I better care about the market. So I got two buying opportunities. Okay, if we breach this 21, it's going to come to the 55. It's going to go up, and I'm already thinking double top. Okay, so there's worth the price action right there. Yeah, and you're going to see sort of like an oscillator that looks like that. Okay, so maybe in Asia you'll get a double top at a weekly reversal pivot zone with an odd oscillator. It'll drop to make a slight lower low, which would be a 1, 2, 3 reversal. My short would be there, probably at 21.00 even Steven. Not now, which is basically where we are. Not at the double top, Okay, but a double top at resistance at a reversal zone after a 1, 2, 3 pattern, kicking off the cycle level as my entry. Overbought. Okay. Next. Let's do Kiwi. Ian, gold. We probably got through the 13, huh? Hang on. All right. So if I'm bullish in the US dollar, I want to be short this. Resistance. If we break this, this is a problem because it's going to be a higher, higher scenario, and I probably don't want to be bearish. The next area of opportunity for a bear would be way up here. And I'm being conservative because you could take this one. I mean, there's a whole bunch here, right here, here. But I want to give room for it to moderately reverse. And I'll show you why in a second. Let me get rid of the drawing tool. Okay, let me get rid of the one click. Let me back out. All right. All right, so if we double bottom here, well, first of all, let's look at this on a 4-hour chart. Where are we? It makes me think that this could go up a bit, right? So I don't know. I need to be cautious. A little bit of resistance in there, a little bit of resistance here. That's why I have this one that I just added. So let's do that. It kind of looks range bound, doesn't it? And shorting down here as a bear on this pair seems a little dangerous to me. Okay. Seems like on this time frame on the 4-hour, the 4-hour oscillator definitely wants to go up. So I think at best it would do that. Okay. Even more likely it's going to, it could possibly do that, right? Does that make sense? So I'm a bear, and on this time frame, I'm suspicious of where we are, and I think there's some significant potential for like that. So again, is it Kiwi strength or is it dollar weakness? Well, CAD kind of is hinting towards that too, right? Okay. I got a request, excuse me, for gold. Why not? Gold priced in dollars. Okay. 13 was a scalp opportunity. Wonder what's going to happen now. We're right on it, 1300, 1,300. Okay, so if we're bullish on the dollar, we'd be bearish on gold. Let's look for some resistance. Yeah, the pivot profit zone looks perfect. I'm good with that. Let's zoom in now. Looks like 1310, 1310 to 1320. So let's say 1325 and then down. That's another 25 bucks upside. That's a lot of money. So the way you could play this is you could be short-term long to long-term short. Again, this is suggesting, now this is not a currency, but we had two currency pairs that suggested potentially short-term dollar weakness. Gold says it could go up another 25 bucks before even thinking about coming down. Short-term dollar weakness? Interesting, huh? Like USD CAD, for example. Remember how we were testing the hourly 21 and bending it and breaking it, which means when it snaps, it'll drop down to the 55. It's a step down, right? So that means Canadian dollar strength, US dollar weakness. Then it hits the 55, rallies up, and makes a double top, which would indicate strength, US dollar strength. So short term beat, right? So very interesting to see what happens here. So maybe we can mark this up. Let me back it out a little bit. Okay, remember, if you're looking to sell gold, you have to do it at resistance. That's the most beautiful part about having a trade plan, is that now I know I don't need to do anything. Now I wait. Keeps me out of trouble. Okay. Of course, you could buy it too. That's what you want to do. I'd probably trade it on a 5-minute chart. Okay. Market's opening, right? Yeah, the double bottom might be setting up. Thank you, Ian. Yeah, Fendi, I'm not doing Swissy. Remember, I'm a conservative trader, so not interested. See, I can make a lot of pips, but that means I could possibly lose a lot of pips, and I'm not interested. Oh, sorry, Fendi. It's a joke. You know what? It's not a joke for a lot of people. Okay, crude. There's our trade plan from earlier. What do you think? Are we still working our way down? Aggressive target set for 2 weeks ago was 42.50. Our conservative target was 44, which we nailed. Thank you. The second target is 42.50. So we'll see, if this was just like a 3-wave correction, and then, we continue mission down to the next. And I think we still have our analysis here. No, we don't. How did we have it? I've forgotten how we came up with we had a fib in here, but I forget what we fibbed. But anyways, those are our targets. I still remember them. So maybe we get a chance to get down to the 42.50. If not, then maybe a double bottom. Okay. It's trying to head up here, right? It's trying to use this as support. I don't know. There should be something over here, and it's up here. So I'm thinking, if anything, if it's going to try to head back up, it'd be more like that. Okay? Off the monthly pivot. All right, so that's how I would trade the US dollar today if I was bullish. I hope you found going through the charts with a bias set, going through everything tactically was helpful. I would do the same for the Japanese yens. Remember, your success is created in having the strategy or bias set based on fundamentals or long-term technical charts. You should be able to write your strategies down on a piece of paper. They shouldn't change very quickly. You should be able to say, I am bearish on Japanese yen, or I am bullish on US dollar. Now, that could be for the day, it could be for the week, it could be for the month, right? But like, for example, poor inflation data out of Japan, you could say immediately, I am bullish on the Japanese yen. You can say that. I would write it down so that you have conviction, and then you go and you look to buy Japanese yen, ideally against currencies that are weak in the moment. Okay? That means the Japanese yen pairs would come down. That means you're selling at resistance. You're selling rallies. Okay? The rest is just finding resistance, finding the proper conditions on small time frames, finding the right patterns, placing a trade, dropping a stop, and letting it work. Peace on earth. May the pips be with you. May your profits be above average. Thank you for trading with Trader's Way. We care about you. We want you to be successful. That's why I'm not here to tell you what to do. I'm here to teach you to think for yourself so that you can take care of yourself, you and your loved ones. I love you, man. Cheers. Trade safe, huh? See you tomorrow. Great.